And Zimbabwe's newly introduced currency, the ZiG, has had a notable impact on monthly inflation, reducing it to 0.6%. And oil prices are down as markets await U.S. crude stockpiles data. And it's great to have you join us. I'm Ladi Williams. First off, let's get a sense of how the markets are looking. Starting with the oil market, we're seeing prices down again, just like earlier this morning. Markets are awaiting latest U.S. crude oil stockpiles data. I'm showing a resilient U.S. economic activity. So we still have it there, $79 for WTI crude. And Brent holding up $83.52 a barrel, down 0.1%. Let's get a quick check on the metals market. Gold prices, they're muted, today with market spotlight on key U.S. Economic data. So everything's revolving around the U.S. Right this afternoon. 0.52% down for gold, $2,329 per ounce. Silver, that's $31.53. And we see palladium down about 2.60%. So we're seeing muted movement right there in that market. But to some other stories now, with headline and food inflation eating up disposable income of the average Nigerian consumer, it begs the question, how much can the consumer take? Well, reacting to the current cost of living crisis in Nigeria, Professor Uchenna Uzo believes the average consumer in Nigeria is a hustler. I had a chat with him earlier on Business Morning. Take a listen.
The Nigerian consumer is a hustler. A hustler, I think, is a very good description. Picture a situation of a lady whose name is Kemi, 31 years old, who is a party planner. She's also a lawyer. She's a pastor in church, and she's also a tech guru. The same person has multiple professions, multiple lives, all because she needs to try to earn a good living. And as you go down the social cadre, we are finding people living multiple professional lives, multiple work lives in order to get going, in order to survive in this economy. And it's an interesting trend because those of us in business tend to look at the consumer from one lens only, when there are many other things happening in the life of the consumer. Beyond being a hustler, we are seeing a lot more aspiration in the way people buy and in the way people choose to engage. Nigerian consumers are very aspirational, and even this tough economic time is not taking that aspiration away. The interesting thing that we see is that those at the lower cadre, those that you may call at the bottom of the pyramid, are even more aspirational than those at the higher level in terms of their hope that their incomes will rise, even though the economy is tough and inflation continues to rise.
That was Professor Uchenna Uzo earlier on Business Morning today. But still looking at prices at this point. In Nigeria, we see the price of life-saving pharmaceuticals have risen over 100 to 200% in recent times, making it difficult for Nigerians to afford basic medicines. Meanwhile, vaccine affordability is another big issue with the likes of Gavi and its partners trying to make vaccines affordable. Let's talk to Emily Kobayashi, now head HPV program at Gavi. Great to have you on the show.
To be here, thank you. Good afternoon.
So I heard about the $5 million commitment from the Girl Effect. Talk to me about this fund and how Gavi is matching this to amplify its impact.
Yes, happy to. Girl Effect is an organization that brings an incredible specialization in engaging with girls themselves. And with the HPV vaccine, that's extremely important because we're targeting girls aged 9 to 14 to receive the vaccines in Nigeria. So Girl Effect does in-depth research with the girls themselves. They learn what motivates them, who influences their decisions, where they get the information, and then they develop a multimedia response that reaches those girls where they are and supports them in accessing vaccines.
All right, so how does this, the partnership with Girls Effect, how does it enhance Gavi's mission to increase HPV vaccine uptake?
Well, we are very glad to be partnered with the National Primary Healthcare Development Agency in the rollout of HPV vaccine in Nigeria. We know that for rollout to be successful, we need to have effective approaches to communicating with communities about the importance of the vaccine, its safety, and its benefits in preventing cervical cancer. So the Girl Effect investment adds power to that introduction of the vaccine by creating more channels for communication to those girls using social media, WhatsApp, communicating with parents, communicating with teachers and other educators to reach those girls and encourage them to take the vaccine.
Well, I guess getting access to the vaccines, that's another issue on its own. What strategies will be employed to ensure, equitable access to the HPV vaccine?
The important thing about HPV is to think about where do we find 9 to 14-year-old girls in Nigeria? And we hope that most of them will be finding in schools, but it varies a lot by state. So what we've seen is really powerful is the investment in individual states who have made their own plans, their own assessment of where they would find those girls, down to the last school, religious institution, settlement, and they're now implementing those plans in 21 states across Nigeria.
All right, so what's your outlook for, vaccine affordability in Africa?
So Gavi is very proud to support the provision of free vaccines through the public health sector. We do this in partnership with governments who do pay a co-financing amount, as well as with manufacturers who we are constantly working with to bring down the price of vaccines over time. So by having strong markets with healthy demand, we're working with manufacturers to bring down their prices and create a more sustainable, affordable market for those governments that are the major purchasers of vaccines in Africa.
All right, thank you so much. We'll definitely be tracking progress right here. Emily Kobayashi, head HPV program at Gavi. Thank you so much.
Thank you.
All right, to some other top stories now. We see the NNPCL Limited have signed a settlement agreement with Mobile Producing Nigeria Limited, Mobile Development Nigeria Inc., and Mobile Exploration Nigeria Inc. on the proposed divestment of 100% interest in Mobile Producing Nigeria Unlimited, that's and Seplet Energy for the Offshore Limited. This deal was announced on the official X page of the NNPC Limited. The acquisition, which has been stalled for a while due to issues on cleanup arrangements, among others, is part of Seplet's strategy to pursue growth in Nigeria and create a long-term value and shared prosperity for all stakeholders. The deal, subject to regulatory approvals and other customary conditions, will see Seplet Energy Offshore Limited assume operatorship of the oil blocks currently operated by Mobile Producing Nigeria Unlimited, including OML 67, 68, 70, and 104. All right, let's get a sense of how to navigate the tough environment as a business climate right here, because at the end of the day, an investment still has to be made in spite of the macroeconomic headwinds. Joining me now is Mr. Ayodeji Ebo, the MD, Optimus by AfriInvest. Great to have you on the show.
Yeah, good afternoon, Lade. It's great to be here.
Yeah, so we're all talking about investments, but there are also big divestments at this time. The latest one reaching us now, Kimberly-Clark, that's a manufacturer of diapers and sanitary pads. They've announced the imminent shutdown of its Ikorodu production facility just 2 years after investing $100 million in the Nigerian market. So we're seeing more divestments at this time. We also want to see investments. Talk to me about this.
Okay, yeah, thanks. So for the foreign investor, you will have to look at it from this perspective. So when you are coming in, bringing $100 million 2 years ago, and if you have estimated the return even to be about 50% in terms of profit margin, so even if you have not used that fund and you want to repatriate your funds, you would see that the funds will be less than half of the amount you have brought in now. But on top of that, the cost of doing business is also now very high. You would look at it in terms of providing power, in terms of diesel, when you look at it on a year-on-year basis, is also very high. In addition, compounding the problem is also the demand from the customers. So that itself. So customer wallet is getting constrained, and people would also look for close substitutes. So, and as a result, all this is going to put significant pressure on the company, that when you estimate, assuming maybe they had a 5-year plan with a 20-year annual return, if you look at the numbers now, that would have been messed up. So, and you know, for sometimes most businesses, they may prefer just cut your losses, bite the bullet, and move on, rather than continue to bleed on a year-on-year basis. So this has implication on the economy. You look at it from the employment perspective. You look at it from investment perspective, because it may also send a very negative signal to potential investors coming in into the country. So I feel that on our cost of doing business has to also be looked into. High inflation rate, which is impacting consumer wallet, has to be also looked into for companies to be able to survive in these very challenging times.
Right, and definitely, I know you've been tracking most of these companies that are divesting, from Nigeria at this point. Talk to me about your outlook, for an investment climate. Do you think at some point, these companies will see a reversal on this trend of divestment?
Okay, thanks. We know what foreign investors look out for. They need to be able to project. That's stability, policy stability. They need to be able to project. So I feel that if we're able to maintain, even from the FS perspective, people are able to project in the next 1 year, 2 years, what the exchange rate will be. People will be able to, investors will be able to plan. That is really very important. And also policy from maybe the monetary authority, fiscal authority, they are all also very important. And lastly, security is also very key, because most times put that as one of the last factor, but security is also very key. And if we are able to minimize that to level, investors will be happy to be closer to market. There's what we call proximity to market. So we say, yes, the market is there, yeah, wallet is constrained, fine. But if there's also security, that will provide a bit of confidence, and you can also, that stability is also very key across the different policy.
All right, we keep looking at, most of the institutional investors, the big investors at this time, but we know retail investment is also, very important, for most of these markets. And this is, we're having a cost of living crisis at this time. So talk to me about retail, retail investors in Nigeria. How do you think they're faring, at this point, seeing that most of their disposable income seems to be disposed, at this time?
Okay, I like the question. You would see that when we talk about disposable income, it is what is left after from your income. So, but what you would see is that for most people now that we talk every day, try to encourage people to save and invest. But when you see that the rate at which the consumption is rising, the propensity to consume is really very high relative to the rate at which the income is rising. So that eventually leaves a little bit for savings. And if you cannot save, or if you're unable to save, given the increasing consumption, then investing would be very challenging. So that is really very significant. But what retail investors, what you need to first of all do is that for most of them, you need to be able to also identify the type of investment that at least will give you a bit of more return. This is not the time to have idle funds not earning return. It's better to bridge the gap, because what we hear from investors on a daily basis when you engage them is that inflation rate is high, it's at 33.68%. I can't find any investment giving the same return. But if you look at it from this perspective, that by not taking any action, you are losing money. Means if inflation is 33%, if you have 1 million in the bank in the last 1 year and has not earned any return, the effective value of that money is around 700,000. So if you now have the option for you to invest and earn 20% return, on that investment. So you would see that you have reduced that impact on yourself. And that even gives you further boost for you to be able to earn more income and you to be able to also purchase more. So there's a need to be aware that if we continue for the retail investor, continue to lament, and you have the opportunity to even have a bit of money saved aside, and you are not making effective use of it, then you are already shooting yourself in the foot. Then there's a psychology that Ponzi schemers also play on this time around. Because most investors, there's the potential to be greedy, to want a return that is significantly higher than what you get in most of the investments that traditional investments. They try to come up with things that would be significantly higher to be able to attract you and lure you to invest. You need to be mindful of that. You need to be mindful of or understand the current interest rate environment. What is the interest rate on fixed income instruments? What is the interest rate on commercial papers? If someone is promising you something very significant, then you need to begin to ask questions. You are promising me a guaranteed return on a monthly basis. What form of investment are you channeling these funds into? Because this is not the time to lose your hard-earned money. To make it now is more difficult. So you need to be able to guard whatever you have been able to earn, understand the type of investment you are going into, ensure that you understand your risk appetite before you go into any investment.
All right, Mr. Ebo, very quickly now, there's this new mantra, spend now, save later. Does it still stand?
Yeah. Yes, you would see. So when inflation rate is high, sometimes it is wise that you purchase or you spend now, because if you are saving the fund at a rate that is below inflation rate, then it may not be wise, because you may not be able to achieve that particular target. So if you have things that will add value to you that you need to spend more on, or you need to lock down the value, it makes sense for you to lock it down. So you want to buy, let's assume you want to buy air conditioner, and you know the rate at which it's been increasing is 50%. So instead of, and you have access to the fund, if you save now and you earn 20%, but in the next 1 year, that the price of that item will increase by 50%. So it's wise that you go for that now. Period when you also note that period when the interest rate is very low, the marginal propensity to save is also very low. But what we're also seeing now is that because interest rate has improved significantly in the last 3 months, investors are also willing to save more rather than also spend.
All right, Mr. Ebo, I guess after this show, I'm just going out to go spend it all at this point. Thank you so much, Mr. Ayodeji Ebo, MD, Optimus by AfroInvest. Thank you so much.
Always my pleasure. Thanks for having me.
All right, we'll take a break now. When we come back, we'll head straight to the markets. Just stay with us. All right, let's head straight to the markets now. We have Willie Bong with the details. And I know you love to save, but going by what Mr. Ebo said, I think it's time for you to spend.
Yes, it's time to spend, but I'm thinking Nigerians might not be able to spend again now that Kimberly Clark is planning to exit the country.
That's another bad
That's another bummer. That's another potential company that could have listed on the NGX leaving the country.
Right.
And one of the things that we listen to.
And they produce sensitive materials.
Yes, they do. Very, family care, child care products. That is very, very essential. And if you listen to Bismarck Rwani's conversation yesterday when he was doing his analysis, he talked about one of the highlights of this administration, what we've had or what we've seen is companies divesting and leaving the country. So the government needs to do more to keep companies. I think they should pay attention to this. We can't keep losing these companies.
Because we're going around trying to woo other investors.
It's going to be a very difficult time.
So we need to keep the ones that are right here,
of course,
right now.
Of course. So we're just going to go straight to the market and see how they performed at intraday, starting with major equities in Africa, where sentiments were mostly negative at intraday. Nigeria's NGX was slightly up However, 0.08%. Now at 98,900 points. One of our analysts say that we have broken past the resistance level of 98,429 points. Let's see how that's going to pan out for the NGX. And that index of South Africa at intraday was down, however, nearly 2%. Elsewhere, let's look at EGX and see how they performed. Nearly 1% down at intraday, still at 26,000 level. Kenya down Wednesday's trading session, ended that session in the red, 0.10%. Now let's look at what's driving intraday activities at the NGX, and joining us is Adeboye Teriba, Managing Director and Chief Executive Officer, Qualinvest Capital Limited. Good afternoon, Mr. Adeboye. Mr. Teriba, it's good to have you on the program.
Yeah, good afternoon. Thank you for having me.
So stocks are moving, indexes are, slightly higher at intraday. So what's moving the markets at the moment? What are the movers? Can you tell us about that?
Yeah, the market is moved by sentiment and information that comes into it. And currently, we have quite a lot going for penny stocks like likes of International Energy, consolidated hallmarks, and what have you. But generally, information that comes to the market, especially last week that we had the MPC meeting and the GDP report coming to the market, they all have a far-reaching effect on the market. The market is still reacting to that. And we saw last week that immediately that was released, we saw the banking stock going down. Unfortunately, this week, we saw some recovery in the banking sector and some blue chip stock as well. But we see more of the low cap stocks are actually being the leaders in the market as we speak, because we see investors trying to rebalance their portfolio as much as possible. And especially now that most of the banking stocks have paid dividend, they are rebalancing their portfolio to take advantage of these low cap stocks with high volatility and market potential for gain as well.
Okay, great and fantastic there. So we also seen, that was yesterday coming in, we saw Dangote Refinery planning for dual listings on the NGX and the London Stock Exchange. And Dangote says he could try to list the company on the NGX by the end of the year. Mr. Teriba, why the choice of a dual listing to begin with? As we all know, this will be the first of any of his companies to, venture into this or attempt this.
Yeah, thank you. I think it's the best thing for him to do, considering the fact that the fund raised for the refinery are not wholly locally sourced. A $20 billion investment required him to actually look outside the shore of the country. And I would agree with Hedwig when he said that at the depth of the Nigerian market, it won't be enough for them to totally list everything here. And Dangote will not be the first. We've seen the like of Seplat and Airtel having similar listing on the London Stock Exchange and Nigerian exchange as well. It's something like a reputational thing for Dangote to go out there. I have conquered the Nigerian market. That is what it is. Most of these conglomerates are listed on the Nigerian exchange. And no, I want to go outside there, show that, okay, what I've been able to achieve here can be achieved in other markets. And mind you, we need to raise funds as well in foreign currency in order to service some of these obligations, debt maturing and what to do. So it needs to be there. When Seplat came to the market then, when they were listed on London Stock Exchange, they have huge impact on the money they raise via that. And I think Dangote want to take advantage of that. And it is an opportunity for local market. It gives some level of confidence for investors locally as well. It provides opportunity for a whole lot, arbitrary opportunity for people that understand the market, buying in London and selling in Nigeria, buying in Nigeria, selling in London. At every point in time, it's broader investors base as well. Will be there for investors with different level of understanding of the market dynamics. So it is a way to go. And even in Africa, we have like 12 companies in Africa going through that, having a dual listing. So having a Dangote listed up there, it's an advantage for our home market. It's a visibility for him as well. It puts him up there in the eyes of the world. This is a refinery that is the biggest in Africa. It need not to be hidden. It has to be up there where the whole world will see it. And it will require a lot of things for him as well, because the compliance, the opening up of information it is required of him, because listening to that market, of course, and in Nigeria as well, require him to provide quite a lot of information to the public. And at the long run, it will be benefit for the firm, the company, and for investors like Nigerian investors that want to actually have an hedge against the Naira as much as possible.
Fantastic. But let's focus on the oil and gas sector now in the country. What are the potential implications for other players in the industry, seeing that we got news this morning that Seplat has reached a settlement agreement with ExxonMobil on the asset sale? How is this going to impact other players in the oil and gas sector here in Nigeria?
Yeah, it's a positive thing. This thing has been it has been lingering for quite some time, and it having come to this resolution is a way to go. And we need to increase investment in that area, because in terms of our daily crude oil output, we are still lagging behind, and less than 2 million barrels per day is short for us to achieve anything. And looking at the stock feed into Dangote Refinery, we have a whole lot of way to go. That is why he have to go ahead to be signing pact with a U.S. firm in order to get a guarantee of crude, because he cannot be assured of what will come from Nigeria. But with this, is a positive development. It will increase our potential in order to produce more in terms of daily crude oil output. And I see a lot of investment going into that direction as well. Looking at, okay, these are making way to resolve this problem. All other ones that may be lingering, it's a positive sign that those will be resolved. And it will be better for Nigeria, better for the oil and gas sector as well.
Fantastic news. So how do you think the market is going to end today? Let's just look at, the close of business. Seeing that we are slightly not in so strong positive territory, do you think we're going to reverse and go back to negative territory in Thursday's session?
It all depends on the investors. Currently, the market is down by 0.2% currently. So it can still close positively, depending on how the investors see it and take opportunity in the market. So it's still like almost 1 hour of trading. So anything can still happen.
Anything can still happen. That's the market. Anything can still happen. Thank you so much, Mr. Adeboye Tariba, CEO, Quali Invest Capital Limited, for joining us on Business Incorporated.
Yeah, thank you for having me. It's a pleasure.
So we move on to other stock markets in the Middle East, where Gulf stocks were mixed at intraday. We see Abu Dhabi up 0.18%, Dubai down flat in that region, and this was weighed down by stocks. Many assets in that place are really coming down on the fact that the U.S. Fed is probably not going to cut rates anytime soon. Now, still within the region, Saudi Arabia down 1.5%, and the Qatari index was up, however, 0.43%. Let's see stocks futures in the U.S., how they fared in early trade today. Shares of Salesforce slid on a quarterly revenue miss and soft guidance, and that's really impacted on the equities trading. We see the markets were really down after Treasury bills, the yield spike. We see S&P 500 futures slid about 0.45%, and NASDAQ 100 futures fell 0.4%. And we also saw in extended trading yesterday, Salesforce plunged around 16% after missing the revenue expectations for the fiscal first quarter. The company's earnings and revenue outlook for the second quarter also fell short of estimates. Now let's move to Asia. There was extended losses in Thursday's trading session as they were tracking Wall Street moves ahead of the slew of economic data that was coming in from the region that is expected tomorrow. That's Friday. We see South Korea's Kospi down to end today's trading session 1.56%. Nikkei in Japan was down 1.3%. And we're talking about China now, the Hang Seng index there is down 1.34%. Let's look at Shanghai market. Let's see how that performed. That index was down 0.62%, and also Australia down 0.49%. Australia, one of the major contributors to Australia's downtime is the losses in the mining stocks, in the mining sector. And we're just hoping that the inflation numbers that we got, because that has influenced the sentiments of investors, we're hoping that, they get over it and, take the opportunity to make a buy and probably pop that market back up.
Right, and definitely we know investors just want to know one thing at this point. Mm-hmm. When are the rate cuts coming?
Yes.
And if they don't get that, then we'll continue to see this
red
color. Thank you so much, Will, for the details there for most of those markets we track. Well, let's take it on to Europe now. We see German national carrier Lufthansa has long been making efforts to take over Italian national carrier, that's ITA Airways. But the deal is viewed with a lot of questions and concerns by the EU, and the deadline to turn this deal to reality is coming really close. Will Lufthansa succeed? For more on this, we have DW's Varda Imran join us from Berlin. Great to have you, Varda. So tell us about this merger that Lufthansa is planning.
Thanks for having me, Ladi. Sure. So ITA Airways, which is Italian, was formed in 2020 after Italy's previous national carrier, Alitalia, was shut. The new ITA Airways is a much smaller company, but Italy was open to takeover bids even then in 2020. German carrier Lufthansa was interested, and after months of negotiation, Lufthansa announced exactly 1 year ago that it had come to an agreement with the Italian state. The plan was that Lufthansa would first acquire 41% of ITA Airways, for which Italy would receive 325 million euros. After that, Lufthansa would buy another 49% of shares from 2025 onwards. Now, this was the plan until late last year, but in January of this year, the EU antitrust regulators blocked this deal and said they wanted to look into it. Now, at the start of this month, they announced specific concerns that it wants Lufthansa in Italy to respond to.
All right, what are some of the concerns from the EU?
Right. So the EU Commission, and specifically the antitrust chief, is looking into whether this deal violates competition laws. Basically, the EU is concerned that this merger could result in higher prices for customers, reduced quality, or that competition on certain direct routes within Italy would be impacted. For this, they had asked for responses and concessions in the merger deal from both Lufthansa and Italy. This month, both of them submitted concessions and replies to break this deadlock, but the Commission in Brussels is not convinced yet. There's also a lot of talk about what role ITA Airways would play when it's part of the big Lufthansa group, which also has Eurowings, Austrian Airlines, and Brussels Airlines under its wings. There is a deadline to turn this merger into a reality, and that's July 4th. There is some fear that this deal may fall through because of these concerns, which would not be good for Italy.
All right, how are the markets looking in Europe?
Well, investors and stakeholders here are definitely keeping an eye on German inflation, which rose slightly, but an uptick was expected, so it didn't come as a surprise. It was up 2.4% from last May and 0.2% up from last month. Observers are saying that the road to bring down inflation will be bumpy. But falling energy prices by the tune of 1.2% compared to last year is good news for consumers. But inflation remains stubborn. Elsewhere in the US, the dollar is doing better after a 2-week low. The S&P 500 index dipped 0.7%. 4 of every 5 stocks dropped in May. And that's all from here in Berlin.
Thank you, Varda. Well, thank you for the details there. That's how Europe is looking at this point. Let's take it on now. We see in Africa high inflation and currency depreciation and underperforming stock markets, all impacting African millionaires and billionaires at this time. I'll have a report from Henley. Joining us now is Troy Henley, Managing Director, Henley Partners, the London office. Great to have you on the show.
Hi, yes, thank you for having me.
So can you give us an overview of the African Wealth Report and its impact in 2024?
Sure. Okay. So at Henley and Partners, we are specialists in residence and citizenship by investment. And I think because of the demand from Africa and the presence that our firm has in the continent, a few years ago, we decided to put together the Africa Wealth Report, which simply tracks the trends of wealth across the continent, the growth of wealth, the declines in certain pockets, and certain trends that we notice. And I think as Africa is considered one of the youngest continents globally with some of the biggest potentials in terms of wealth growth, there are a lot of eyes on the continent to see just how this growth and these trends play out.
So with what we're seeing, so far, we're seeing African currencies being pressured a lot at this time with a rallying dollar. How resilient are the millionaires in Africa?
Mm-hmm. Yeah, that's a very topical point right now. So in the short term with the Africa Wealth Report, one of the main things we're seeing is that the number of millionaires is actually receding a little bit. And it's definitely to do with currency pressures, general economic concerns, especially in Nigeria, you see there's a cost of living crisis. All of these things is putting pressure on households, and that's meant a drop in millionaires. However, there is some positive news to all of this. The long-term trajectory is very promising. In fact, the IMF sees Africa, or sub-Saharan Africa rather, as one region with one of the highest growth rates in millionaires in the years to come. So these numbers will boom, and that can only mean great things for the continent.
Right, and I know in computer games, we talk about difficulty levels. Talk to me about how difficult or easy it is to become a millionaire or a billionaire in Africa at this time.
Mm-hmm. Well, I think most people would agree that it's slightly becoming easier, with the rise of technology getting in the hands of younger generations that are able to join the workforce and support big business. I think most people would agree that it's never been easier, and it's getting easier for development in Africa in terms of high net worth millionaires, billionaires, and so forth. And also, as I alluded to earlier, there are a lot of regions in the world looking in at Africa with all the abundance of resources, the young population, and so there's a great chance that inward investment into Africa will increase, and that's only going to mean good things.
Are you seeing any unusual sources of wealth at this time?
No, I think it's generally across the report. There's a lot of traditional industries. We're seeing the growth of wealth. Natural resources, oil, gas, agriculture to an extent, import-export businesses. So I wouldn't say there's anything too unusual at the moment. I guess one of the things that is really growing and is noticeable is the technology industry. There's a few hubs around Africa that you can see. These cities are really trying to make a name for themselves to attract investment into technology. That could be very interesting.
All right, thank you. We'll keep tracking to see how many billionaires are minted in Africa in 2024. Thank you so much, Troy Henley, MD, Henley and Partners, London office. Thank you so much.
You're welcome.
All right, let's get to some other stories now. We see Zimbabwe's newly introduced currency, the ZiG, has had a notable impact on the monthly inflation, reducing it to 0.6%, according to the Zimbabwe National Statistics Agency that released today. The ZiG marks the sixth currency introduced in the past 15 years as Zimbabwe contends with a rampant inflation backed by gold and other precious minerals. It will circulate alongside existing foreign currencies. Following the introduction of ZiG, the monthly inflation rate dropped to 2.9%, marking a decrease of 2% from the March 2024 rate of 4.9%. All right, let's head straight to the commodities market now. We see ginger, one of Nigeria's main cash crops, with over 90% of total domestic production exported. Although domestic consumption, that's holding up at 10% of total production. Ginger is still a food spice in Nigeria's diet. However, while food inflation, that sits at 40.53%, domestic price of the commodity, that's ginger, that surged 275% in the last 2 years. 45,000 naira per 50 kg bags. That was in 2022, we had about 12,000 per kilogram, but now we're seeing at 40,000 naira. Join us now is Tomiwa Ajewole, analyst at FDC. Great to have you. So what's responsible for this price increase, outstripping food inflation rate?
Thank you for having me, Lodi. Yeah, at this point, increase in prices of food in Nigeria is not news, but 275% in 2 years is a lot, and this is because just in September 2023 there was a major fungal epidemic in Kaduna, and Kaduna is where 80% of Nigeria's total ginger production is carried out, and this fungal outbreak was massive. It affected about 2,500 hectares of farmland, and crop losses amounted to about hundreds of millions of nairas. Many farmers went into debt. Some lost their means of livelihood, but basically it affected supply, and this was the reason why prices skyrocketed currently to what it is. And also, as farmers went into debt, they don't have the capacity to begin to prepare for the next planting season, which is usually between this May to September. So there's even prospect that supply is going to remain low. But the good news is that the National Development Agricultural Fund in Nigeria just about last week, finalized plans to provide about 5,000 farmers in Kaduna with inputs free of charge, of course. And these inputs total about 1.7 billion naira, consisting of fertilizer, hybrid seeds, and insecticides, of course, and fungicides. So hopefully with this, these free inputs, the farmers are able to go back to the farm and just increase, able to produce, so that supply increases and prices come down.
Right, and talking about prices, I was discussing with my colleague earlier. I'm just looking for that one thing that has not gone up in price, in Nigeria at this point. But with over 90% of total domestic production exported, what can be done to increase, domestic production of ginger?
Just using this Kaduna case as an example, what we'll see usually in Nigeria's agricultural sector is, there's a relatively low level of education or low level of human capital in that sector. We've had cases where farmers, excessively use all these pesticides with the main idea that the more they use, the more the fungi die and the more their crops grow. I know there's a risk of putting too much, which can damage the crop. So obviously, we need to increase the human capital in our agricultural sector. And these are what agricultural extension services are for. And Nigeria has a lot of agricultural extension services, but at this point we need to begin to track and evaluate their performance to see if they're actually working putting in the work and is bringing out results.
So what are you seeing for prices going forward?
For prices going forward, as I said, that right now what we're beginning to see is that as the production is increasing due to the intervention, we're going to see more supply, and also we're beginning to see a shift towards processing the ginger, because usually Nigeria produces just the fresh ginger, but we're beginning to see a shift towards processed ginger, and this is going to help to obviously going to increase the value, and the more there's the supply, we're going to see prices come down.
All right, definitely. We'll keep tracking that price. Thank you so much. It was great having you, Tomiwa, analyst, financial derivatives company.
Thank you.
All right, let's get to the market now. We see the color, of the market. We've seen kind of mixture. Yesterday was mostly red, in the market. That's the crypto market. But still a greedy market at this point, 73 points. Looking at the fear greed index, at this time, and definitely we see some movement there with prices. Bitcoin trying to stay above that $70,000 level, but managing to come down. Sell-off still happening. Let's look at the color, of the market at this time. Yeah, full on. Deep red. Yeah, red. Profit taking at this point, $3,722 for Ethereum, 2.32%. So we're seeing big sell-offs in the market right now. Let's look at the top headlines in the crypto market. And we're seeing our very own Grammy nominee, Davido's launched a meme coin right there on the Solana blockchain. And I'm sure some people are wondering why we have this meme coin from Davido at this time. Now we also see spot Bitcoin ETFs has breached 1 million BTC threshold. So that's what most of these ETFs are holding in terms of Bitcoin at this time. Let's talk to Rume Ofi now, financial market analyst. Hello, Rume. Great to have you.
Hello, Ladi. Good afternoon to you, Ladi.
Yeah, so we're hearing Davido launching a meme coin at this time. Straight question, is this a scam?
Yes, this meme coin launched on 29th has come with mixed feelings, and a couple of us that are experts in this industry are not happy about how it's going. Davido is a renowned voice in the Afrobeat and music in Nigeria and Africa. In fact, the music has gone global, but coming to get involved in crypto is going to make most likely get someone really, really surprised why he has to go that route. But his project was launched on the Solana blockchain quite well on 29th, and what is making everywhere go crazy now is that the project market cap as at the last 24 hours was about $10 million at about 8, according to daily coin, about 8 hours after it dumped to about $2 million, which actually suggests that Davido's contract address moved about $474,000. This is more like saying that it's a case of launching or offering securities here, and a couple of persons have actually lost their money. This is exactly why a couple of persons in the past have been arrested in the US. So one would suggest that someone like Davido should look towards the idea of NFTs rather than coming with meme coins, which are not having intrinsic value directly. It is not good for our industry right about now because the industry is actually battling with regulations here and there, and it's not been easy with the players considering the P2P thing involving all of these again. Actually adds a lot of pressure on the industry, which doesn't make any sense to me. So what this project has done is to further look at the space as where people can just put in something and make money off it to the detriment of others, which we are in this light as industry stakeholders saying no to it. And the SEC must have to look at it because it is more like saying there's a floodgate that is going to happen afterwards because others are going to do it and get away with it.
Right, and has Davido responded to the recent dump, in the price of the coin?
Laddie, I didn't get that question.
I said, has Davido responded? You talked about the market cap, dumping from about 10.
Yes.
Has he said anything about this price drop?
Yes, it has. And a couple of us have actually put a few messages out there. A couple of us have actually put messages out there on various social media platforms. But we hope that he puts his voice forward so that we know the position of things, because the crypto industry is relatively young in Nigeria, and we don't want anyone to come and destroy it with large following.
Yeah, large following. And why do you think he launched this meme coin in the first place? Is it to make money?
I think it might also be a situation of a wrong advice at some point, because this young man is a musician. He's not a crypto personality. We have crypto people that are specifically doing this, right? So peradventure he wants to build this for community, but from the way it's looking, it's a meme coin. If this is a project that has a lot of value around it, not like he is not having value. He's a top star, right? He can build something around himself, and people can always speculate around, that actually, for example, an NFT can even do better. So when you're purchasing his NFT, you have access to his concerts here and there, and some other freebies that comes with his NFT rather than a meme coin. How meme coins are. They are easy come, easy go, So it's particularly for maybe investors, because when the contract address linked to him took about the $474,000, other investors follow suit that tank the market. So I think it's a very wrong approach to the industry right about now, and I think it's also a wrong advice.
So can we call it a rug pull at this time, or there's still hope for the coin?
It's been said now on Twitter. It's been said now on Twitter. It's on X, formerly Twitter. It's been said the whole project is being dragged. $ Davido is being dragged right about now. We could say as time goes by, this could turn out to be a pump and dump thereabout.
All right, we'll keep watching and see what happens with the price of Davido's latest launch there as meme coin. But what do you see in general in the market? We're seeing red, on the screen. Is that why Davido's coin is actually dumping, because the market is really red?
The market is red because we're coming down to the end of the month, and you can see that now there are few possibilities that the U.S. Fed could raise interest rate. That is not out of the table. You can, if you follow the news very well, the Fed president from Minneapolis actually put about 30% chances of a possible rate hike, which also sent some strong waves to the market. So the market has been volatile. Crypto is also a risky asset. So all of that put together is making the market really go crazy. And earnings are coming. And also, we'll be having on Friday here, we'll be having a couple of figures coming out. The PCE will be coming out, and next week, I think, in June, we'll be having the Fed speak. So it's not looking good, really, since the inflation is remaining very strong. But for the case of Davido right about now, putting that together with the market being red is just the situation whereby certain persons are using the musician's pedigree to just make money at the expense of Nigerians, and we say no to it. And I'm urging the DG of the Security and Exchange Commission to look into it so that people don't look at our industry as a joke, as far as I'm concerned.
All right, thank you so much, Rumi Ofi. Always great having your perspective.
Always a pleasure, Laddie.
And definitely, investors just want to know when's going to be the first rate cut in the U.S. When's the Fed going to give that gift to most of these markets? We'll keep waiting at this point, but who knows? Is it going to happen in 2024? Well, that's the show today. You can visit channelcv.com for more updates. I'm Laddie Williams from the team right here at Channels HQ. It's bye for now.